ultimately the fundamentals are backing Bitcoin because the whole network's becoming decentralized and stronger. So yeah, a dump before the pump is this happens a lot in markets. Yeah, and it's like the buyers that bought that push price up were obviously they were very new and they were very prone to the FUD, no matter how bullshit it was. It's utter bullshit, but they bought it. And I even noticed. Remember Michael Saylor and Frank, what's his last name? There was a debate that they did on gold versus Bitcoin, and he fudded. Michael Saylor won that debate clearly on all points from logic and fundamentals, and yet Frank attacked Bitcoin on there's no way the authorities will allow Bitcoin to prosper. And I noticed that the FUD actually worked. The price dropped after that debate, and I think that a lot of these new buyers were, you get an easy 2 to 3, even 4x over a number of months. You're probably gonna be sensitive to like, oh, this is scary. I'll take the profit now. In a highly volatile asset. So I don't know, but I do like how it is like the small guys that are buying it right now. It's it's very good for the network. No, it's really interesting. I've noticed this in markets is when the thing shakes out. Something that's bullish is initially bearish before it goes bullish. So, for example, the 2008 financial crisis, like all the banks were kind of getting wrecked, right? And if you were a gold bug, you would be sitting pretty because, everyone's gonna go into the safe haven asset. But of course, gold sold off like crazy. You got wrecked if you were holding gold because, these kind of more urgent impacts happen where everyone sells US dollars, deleverages, and everything crashes. And then the thing sort of recovers. And of course, gold went on to, like a 4-year bull run. And we saw that with COVID, right? Bitcoin was exactly what you want when the whole market crashed and the money printers started printing on overdrive. You wanted an inflation hedge, but Bitcoin halved also, right? Because everyone was at peak fear. And the same thing now with, China miners, everyone's selling off. But ultimately, the fundamentals are backing Bitcoin because the whole network's becoming decentralized and stronger. So, yeah, a dump before the pump is this happens a lot in markets. Be wary of the hash rate because that's reported by the software and it's voluntary. When the hash rate dropped, when like China tripped over the power core type thing a while back, when they did a number of shutdowns because of some sort of routine maintenance or safety inspections, Adam Back contacted me and said, yeah, actually this stuff is really, you can't rely on it because like it's not perfectly reported. Like I do look at mempool as like a really good time to enter on a dip. If you're positive you're not in a bear market, like that's the first thing you want to determine. Are we in a bear market? If you're in a bear market, then all of your buy the dip indicators are going to get you screwed. So there's all these indicators that say buy the dip, but they don't. Don't buy the dip if you're at the start of the bear market. Like I don't even think MicroStrategy is that significant in the share buying and selling because it's actually that they're influencing people to buy. I'm just looking at the inflation rate. It's 1.43, and that's because the hash rate's dropped, so we're mining at a slower rate right now, which is doing wonders for the stock to flow. But this is going to drop to less than 0.75% of inflation. That sell pressure is minuscule. Like already we're in an epoch where the sell pressure coming off exchanges, and I don't mean this people selling on exchanges. I mean the exchanges. I mean Binance. I mean Coinbase. The revenues that they take when they convert that to cash to pay their expenses and salaries and their shareholders, that sell pressure is more than a minus. So we're in dynamics where the buying and selling is of the market is starting to look like it's making the inflation rate from the mining the lesser significant thing. And so I think that's going to have a decent impact on these normal cycles we see where we get this bullish impulse. I think that it's starting to get weak, and you'll see narratives, you'll see fundamentals of nation states doing their thing, and corporate treasury, all these macro kind of impacts will start to shape the price chart more. And in a way, we could see these normal cycles where we love to imprint on Bitcoin start to go a little bit drunkard, and I think we'll wind in a random walk, what will look like a random walk upwards, but without the cyclical sort of peaks that we've normally seen. And already I'm looking at this long-term price chart, and since the 2017 peak, this bull market's all over the place. So, if you're trading 100x, well, go for it, but you got to know that you got to have tight risk protection. And normally you might, you can do it in many ways. You might just say, I'm going to risk 1% of my portfolio, my trade portfolio, or whatever. But every kind of trade you do, you need to have your risk strategy put in place. So like I consider 1x high leverage from the trading I do. If it swings against me, suddenly I find myself in a 2x leverage position, because I'm trading like very large, long time frame swings. So I can't really use stops, because stops you can get completely kicked out of the trade. Now stops are something that most traders use to protect themselves from downside. If it swings the wrong way, you might, stop yourself out at a 10% loss or a 3% loss, whatever you calculate that is. And so for me, I find these kind of longer term trades, 1x is plenty. It's absolutely plenty.